timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Well, welcome back to the Chapman Business Report, our weekly look at business, financial markets, special focus on the regional economies of Southern California. I'm Pete Weitzner. I head up the broadcast journalism program a couple of blocks west of us here at Dodge College of Film and Media Arts. We're on main campus, and I'm joined by my major domo, Dr. Esmael Adibi, better than 35 years, the chief economist here at Chapman University. And boss, we're going to start this time around with, well, what a difference 5-6 weeks makes. All the concern about the fiscal cliff coming to the end of 2012. Well, we still have, I think we have a sequester going on. We still have a problem. However, we did raise taxes a lot. That, for many people, they felt solved the fiscal cliff. And away goes the stock market and also continued improvement in the housing market. But let's start with the real economy, and that's also good news. Retail sales just coming in as we record for February, and a 1.1% increase. That's a big number.
That's a big number, yes.
How do you interpret that? People just feel wealthier now by the things I just mentioned?
Let's try to understand 1.1% increase.
Incomes aren't going up.
No, not much, but if you multiply 1.1 by 12 to get the annual rate, that's a 12%. So we know
we're looking at what, 5% GDP?
Yeah, that's not
7?
sustainable. We know that's not sustainable.
So what was it?
What's going on is part of it is obviously is a relief that people went through fiscal cliff. They weren't sure what's going to happen. Very many people worried about their tax increases. And as we know, it did not really impact everybody.
Well, let's remind folks, 4 weeks ago, Walmart, the biggest retailer in the world, was calling February, calling the first quarter a disaster.
Miserable. And I still think, you know,
was that the whole thing where they didn't realize folks had to wait for their income tax refund?
Exactly. Part of it was that, and part of it because payroll taxes went up, so people suddenly, they saw a little shrinkage in their paycheck, so it showed up. But let's go back to February report. Part of it, I think, is due to Sandy. You remember what happened, you know, they're going back to rebuilding, and some of those homes are totally destroyed, and then they're putting new appliances. They need a whole bunch of things, you know, in back east, in wide geographical area. So that's boosting in, and that's why when you take the car sales out, usually car sales gives you a boost. That was a good number.
Sequester isn't going to affect that FEMA money, I hope.
No, I don't think so. The FEMA money is separated from sequester. But that is partly explaining what's going on, but at the same time, there are other good news affecting consumers.
Car sales continue at pace, 15 plus, right?
Yeah, over 15. We think it's going to be 15.3 million this year compared to roughly 14.5. And at the same time, remember, consumer confidence is increasing, improving, and there are 3 factors helping consumer confidence. One, the major factor, I would say the job creation has been pretty good. Second, you mentioned it at your opening, stock prices are up, and also home prices are up. So when you put these 3 together in aggregate, that's offsetting the increase in payroll taxes and even gas prices, which are a little bit higher. By the way, in retail sales, part of it is because of higher gas prices too.
Going up, but they may be headed down, at least here in California, where we're the second highest in the nation.
I think it's going to go down.
We've gone to the summer blend. And
the maintenances are behind us and no major disasters, so that's a good news.
And tell me if this was another surprise for you. When the jobs figure came in, finally, boy, it's late in the beginning of the year, isn't it? When the jobs figure came in,
236,000.
236, the best number we've seen in about a year.
Almost about a year,
And for the first time in a while, the national rate pushed down to 7.7%. Construction at 48,000 jobs.
Yeah, let's talk about good news, bad news here. Good, when you look at these numbers, 236 obviously was better than expected. Most economies expected something under 200,000. So that's a good news. The other good news was it was very broad base. That is, if you look at every sector of the economy, you just mentioned construction.
Except government.
But and that is expected, you know, because government was the main engine of economic growth.
Wait till March.
They're going through, and you're going to see cutback, particularly in federal government. I think state and locals are coming back. So these were the good news when you look at the numbers. Unemployment dipped down, partly because, you know, whenever we do over 150,000 a month job creation, unemployment dips down. But the bad news was there was a revision in January number. There was a big revision downward, which translated it to only 119,000 jobs. It was It was much closer to 200. So when you average January and February together, 119, 236, you're about 177,000 jobs. And that is not really a strong job creation.
Well, no, and not enough really to push the rate down in the country to 0.2% of 1%. You have to assume a lot of folks also gave up.
Still, that's another bad news. That unemployment rate could go down to, let's say, I'm exaggerating, to 5%, but that means everybody's sitting home and they're not looking for a job.
Right.
That's not a good sign. So it was combination of both. Good, strong job creation, no question, and at the same time, some discouraged workers still leaving labor force. So the question really, this begs this question: what's going to happen to the rest of the year? We think more or less we're going to do under 200,000 average, job creation per month, which means we're going to generate roughly about 2 million jobs. And if you look at your statistic, we lost
8.7 million.
8.7 million jobs.
We got back 5.3 is the latest figure.
And let's say we're correct that we're going to do 2 million this year. So we're still what? Close to 7 million.
1.5.
7 million, and we're short 1.5 million. And for our audience, we have to say even the jobs that we're creating, not necessarily all are the jobs that we lost. And basically, most of the job losses highly concentrated in construction. Construction is coming back, but it's still, we know it's not going to be at the point that it used to be. So that's a little bit of a concern.
Those mortgage bankers, construction workers,
they were making good money.
Made good money.
And now we're creating jobs. Most of them are part-time and low pay.
Let's run through some other jobs numbers. California is still third from the bottom, 9.8%. Many think Rhode Island and Nevada may even pass us in the next few months. What ails us?
Now, we have fundamental
Orange County's doing its part.
Orange County is 6.8%. It's doing great. And actually, if you go up north, around Bay Area, they're doing very well too. But California is suffering again from the two regions. Western side of the state, eastern part of the state. The eastern part of the state, stubborn unemployment rate, very, very anemic job creation. So that's creating a big drag, even though San Diego, Orange County, and Bay Area is doing well. Nonetheless, we think we're going to continue to see improvement in job creation and decline in rate of unemployment rate, but it's going to be stubbornly higher than the national level.
LA voters did vote down that tax increase.
Yeah, that was good. We don't need any more taxes. That's part of the problem for the state.
With Charlie Beck pushing it.
Of course.
Okay, well, there's also still, despite what the stock market's done, and we should point that out. I mean, we hesitate a little because we're going to record this and it might run in a few weeks. But as we stand now, I think we had 8 records in a row. So looking at the March 12th prices, we never thought it'd be a while to get past the Dow record of 14,165. We've blown it away. S&P's record is hanging in the balance. Wouldn't want to be it. 1552 versus 1565. And NASDAQ may never hit 5,000, but it has more than doubled from its nadir of about 1,200.
NASDAQ is going to go back to 5,000 one of these days.
One of these days.
Maybe
the next new big thing.
Yeah.
So first of all, why this rally, and why don't, and I'll prove it to you, why don't folks still really buy in?
Part of the reason, again, people looking at the earnings, there are a couple of ways to look at the stock market. On fundamental basis, you always look at the earning, because
when you buy Google's earnings?
When you buy, there are exceptions here. When you buy stock of a company, you're basically buying a right to their earning into the future and the dividends or appreciations that you get. When you look at the earnings are pretty decent, but
multiples are actually pretty
multiples
low
are good. Most of the earning is coming from the cost portion of the balance sheet and income statement rather than top line. And that's what the concern is. Eventually the cost is going to go higher, especially labor costs. So looking at the earning, yes, it is decent, but it is not really robust. That's part of it.
We'll wrap this up. So a lot of folks think this is a Fed-driven rally.
Yes,
cheap money, companies can make money. And why would I put myself money in a bank or even a bond, and that can be precarious, given what we just said about municipalities. I'm almost safer in a good dividend stock. Yeah,
people are buying, looking at the return.
American Express, my God,
the return. They're looking at what do they get with their CDs, 0.5% maybe per year. They can get 3-4 percentage point buying some of the dividend stock. And this has, by the way, improvement in the stock has positive impact on consumer spending that we can talk about it more.
Last question, throw some cold water on this. We were 2 weeks into the sequester, 85 billion.
Yes.
In annual spending cuts across the board. Have we seen an impact? What impact will we see?
No, we haven't seen any impact yet, because when it comes to government employees, they have to get a notice 30 days in advance. So they've been giving notices to government employees that their number of hours furlough basically is going to come. But what the impact, serious impact, is going to be, I'm not that much worried about government employees, is the private sector that is producing goods and services, particularly for defense department, that they're going to see, you know, their money is going to suddenly shrink. And remember, some of these small businesses are producing 1 or 2 gadgets for defense industry.
Right.
If that is gone, they're gone. And if the money shrinks, they have to let go of people. So those are going to be serious impact that hasn't shown up yet. And I believe the government is going to, basically the president and the House and Senate is going to come up with something that minimizes the impact of the sequester.
Okay, well, certainly the other real bright spot, surging spot in the economy, and it took so long to get there, is housing, new home construction, home sales. We'll take that up in our next show. I'm Pete Weitzner. This is Dr. Esmael Adibi, the famed economist. Thank you very much for watching the Chapman Business Report.